Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Joining us today is our good friend, Peter Krauth, former portfolio advisor and 20-year veteran of the resource market. Peter, welcome back.
Ivan, it's always a pleasure, and I'm looking forward to today's chat.
Yeah, it's always a pleasure having you on Wall Street Silver. So, Peter, 2022 will be an epic moment for investors. A lot of people are talking about this. Do you believe we will see another 20-30% drop in the stock market from where we are right now?
So, I would say yes. I do think that that's in the cards. I don't think that I can't say if it's going to be necessarily this year, but
Mhm.
I do think that, let's say, if we look a little bit further out to maybe the first half of 2023, I think that certainly we should expect that kind of thing. In fact, I was just doing some research that for example, the Dow Transportation Index tends to lead
Mhm.
in terms of the Dow peaking, and it has peaked. It has peaked a little while back, so I think that we're not in for bottom until a little while yet. There is very likely further down to go. Unfortunately, I guess. Yeah.
Mhm. Now, in the event of, let's say the stock market does drop another 20-30%, and in the future, looking out in the event of a replacement for the US dollar as the reserve currency, what do you see happening, Peter? Do you see people just blindly accepting a digital backed currency if they roll one out?
If we were a few years ago, I'd probably say yes. Today, I'm just seeing so much pushback and so
Right.
much doubt and questioning. People really are becoming a lot more critical and cynical. And I think that it's not going to be it's not going to be such an easy replacement for something like that. It has such wide implications, and a lot of other countries that are maybe considered less US or less Western friendly are not sitting back. The BRICS are actually being very proactive. They're
Right.
actually working on what we call a digital payment currency, and they're talking about having that potentially backed by gold and a basket of commodities. And it's hard to imagine a lot of countries that maybe, let's say, somewhere in between the BRICS and the West, looking at these two poles and
Right.
saying, what makes sense for us. A lot of these tend to be developing, or I guess what you'd call maybe even second world countries, and a lot of them are exporters of resources, and they probably would do well to side with that kind of currency and payment system. And so I think that that's certainly something that people have to have their antennas up for, and look as a potential future for currency. Absolutely.
Do you think the West will just allow them to do the BRICS nation and do their own thing? What do you think will happen with that?
Yeah, I mean, I don't know, just think right now already in the BRICS, you've got two big powers, basically Russia and China, and so the West may not like it. I'm just not sure that it's so easy to push them around. And then you've got Europe, and Europe. I'm not sure that how that whole thing with Europe is going to play out, in the
Right.
sense that it's not so obvious that, I think they really are kind of stuck between the far west and the far east, and it's not so obvious that they're going to easily just side with the West. What's happening with their energy crisis this year and into this winter is really something that can't be underestimated. And so I think that there's going to be considerable pushback from Western Europe if it comes to right down to it. So I think that it will be difficult for the West to really put up a lot of barriers to that developing. I mean, they're working on it now. There's really very little we can do. The Russia was kicked out of the SWIFT payment system.
Do you think that was a
Um,
mistake ultimately?
Sure, I do. I mean, just freezing their dollar assets basically said to them and anybody else that has a lot of dollar assets, especially sovereign players, that those assets could be worth zero overnight. Doesn't matter.
Right.
Doesn't matter that
That's
they've been
crazy.
yeah, it's just it's wild. It really has been, in the words of Ken Griffith of Citadel, the dollar has been weaponized, and so you can bet a lot of big dollar holders have that hasn't escaped them. They're looking at that and they're looking at what their alternatives are, and so some kind of a backed digital currency backed with commodities and gold and physical gold and precious metals today certainly have will have a role to play. And I think that they're no doubt doing plenty of research right now in terms of in terms of where they're looking going forward.
Do you think Saudis are looking at this and saying, "Oh, there's no way, like they can just turn on us one day and cut off all of our US dollars and connection and all of do you think that's why they're moving closer to China and Russia, the Saudis?
Absolutely, absolutely. I mean, they sell plenty of oil to China.
Yeah.
So does Russia, of course. But they've been talking with China for some time about pricing oil, paying for the oil in the yuan.
Yeah.
And so, yes, there's no question that the Saudis are looking at participating in that group. And I was just reading this morning that China is aggressive with its rollout of a digital currency. They've just said that they're expanding the digital yuan to 4 provinces now, rather than just sort of a limited test trial on a handful of cities. So they're the leader, absolutely, in getting a digital currency rolled out. It's going to be interesting to watch someone else and how that plays out for them. But yes, they are definitely coming. They're not good for the average citizen. That I could pretty much guarantee. But it is coming, and so people need to be aware and watch how it plays out and take positions accordingly.
Now, moving on to our favorite subject, silver.
Yep.
Where are we at with precious metals? You said before we recorded we're in a messy transition period. Can you explain that to our audience?
Yeah, absolutely. I think that anyone who are even the most stalwart and high conviction silver and gold investor is having their patience tested since a while. But if you look at where we are, I think that it's really useful to look to take a high level view. And I really do think that we're in what I call a messy transition period. And sort of some of the best analogs are, if you look at around the 1980 to 82 period,
Hmm.
both stocks and bonds, that was the start of a 40-year bull market. By the way, I think we're at the end of that 40-year
Yes.
bull market in both stocks and bonds right now.
Uh,
That's another transition. But stocks really actually, I think, went from both of them was around from about mid 1980 to about 1982. If you bought into stocks and bonds at that point in time and held for those 4 decades, you did extremely well. But those first 2 years saw some real whipsaw action, and so some people, no doubt, got kicked off the bull, got thrown off that bull. In bonds, for example, in the space of about 6 months, if let's call it what it is, but if you did buy at the peak, you made about 30% in long-term U.S. Treasuries
mhm.
in about 6 months, but you gave up half of that over the next 6 months. So that was really difficult for some people to swallow. But if you held tight and let it play out, like I say, it was some real whipsaw action. But bond prices went way up, yields went down over the next decades. Stocks did the same thing, and as I say, that played out. But it certainly was the start of a long-term bull market in both assets. Similar thing happened to precious metals in the 2000, say 1999 to 2001, 2002 period. Both gold and silver were quite volatile. Took a while for the bottoms to form,
Hmm.
but then the next 10 years were just tremendous. I think that we're in the middle part of this secular bull cycle. That's typical. I actually talk about that in the book as well. You get that very typically in secular bull markets.
Right.
Commodities in particular, that you're going to get this considerable drawdown in the middle of the bull market. I think we're in that period right now where that's playing out. Certainly, what's happening with the Fed and with central banks raising rates against inflation has a lot to do with how that's the narrative, at least in terms of
Yeah.
making that correction period play out. When that's behind us, I mean, I think really all bets are off. People just really need to stick with their positions, and they will be rewarded.
So you just need a little bit more time.
You got it. As much as difficult as it is, you know, that's where you want to be.
Now, talking back to the European countries and their energy crisis, a lot of their countries are talking about taking precautions like rationing energy this winter. In your eyes, how bad can this get?
Well, it's bad enough that the Swiss are considering fining citizens for heating their homes above
Oh
19
yeah, I
degrees.
seen that. Uh,
That's for American viewers, that's about 66 degrees
oh my goodness.
Fahrenheit, right? So I mean, it's bearable, but it's not. I wouldn't call it comfortable. You're gonna have to. It's good maybe for the sweater industry, but that's I think that says a lot. The Swiss are cautious people. They're forward thinking, and so they're certainly expecting that it's going to get rough. The Germans, I think, are actually expanding their production of what they call brown coal, which is the messiest of all coals. This is the country that said they were going to, after Fukushima, said, okay, we're off the nuclear bandwagon. Let's
Yeah.
get rid of this. They went the way the wind was blowing, and unfortunately, the wind doesn't blow that strongly sometimes, and so their electricity from wind doesn't do that well either. But the politicians where the wind was blowing in 2011 said they were going to get off of nuclear. It didn't hurt that they were buying nuclear from France, by the way. So, they let someone do the dirty, so quote under quotes, dirty
That's right.
work. But yeah. So and now they're changing their tune. So I mean, like I say, they're switching to brown coal, the dirtiest of the coals, and the least efficient, but they're desperate. And I do think it will be a rough winter, absolutely. And if anybody thinks that central banks hiking rates the way they are is going to beat inflation, there's just endless amounts of things I can say about that. But already it's the inflation is not going anywhere. The effect is delayed. Think about the fact that Europe is looking at a 375, I think it's $375 billion program to limit energy bills
Yeah.
for the next while. The UK is looking at a program of $116 billion to cap energy bills for the next 2 years. I mean, this is all inflationary. Where
Hmm.
is this money going to come from, and what's it going to do?
They got to
And then you
turn the
have
printers on.
right. Then you've got the inflation, oxymoron, Inflation Reduction Act in the U.S. that that's spending another 300-400 billion dollars. Over 300 billion of that is going to go towards climate greenhouse gas reduction, climate change. Actually, silver is going to be a very big beneficiary from that, because there was a study by Princeton, Dartmouth, and a couple of research groups together that said that solar in particular, 2 years ago, represented about 10 gigawatts of power installed per year. By 2025, it's going to, because of the bill, it's going to represent about nearly 50 gigawatts.
Oh
And
wow.
by 2030, it's going to be 100. So 10 times what it was just 2 years ago. And silver is going to be a huge beneficiary from the rollout of solar. And about $320 billion are from, because in some ways, because of that act, are going to flow into solar. And silver is the single biggest industrial use. Solar is the single biggest industrial use of silver, and
Mhm.
it's 10% of the about 12% of the annual silver supply. And if you look at just the industrial side of silver demand, it's more than 20% of
Wow.
all industrial demand. So, I mean, what's going on with silver simply cannot last. We see what's happening with the LBMA vaults, the COMEX vaults. Those are both being drained, at a rapid pace. They're down like 20% in the last 9 months. That silver is going somewhere. Someone is taking possession of that for something. And I
Well,
just
they
think that,
probably just don't trust it anymore at the Comex.
right,
They need to take delivery.
exactly, for sure. And they can see bargains as well, right, in the silver price. And they're seeing what's happening. Silver Institute is saying that we had a shortfall, a deficit last year, about 50 million ounces. We're going to have one of 72 million ounces this year, and
Wow.
they forecast shortages for years to come. Some unofficial, I guess I'm going to say, at least research and reviews in terms of their forecasts right now are that the demand, although they thought industrial demand was going to go down this year, they're actually that's likely to be revised upwards by multiple double digits. Yeah, look for some news on terms of what the forecast is for industrial demand for silver this year. It's gonna shock a lot of people, in fact.
Well, Peter, we appreciate you so much coming down to Wall Street Silver. It's always a pleasure having you on here with Wall Street Silver.
Thanks so much, Ivan. I always have fun talking to you guys.
Awesome. Take care, everyone.